Says anything over 6,000 pounds, you can write off 100%. You could buy it on December 31st, write it off that year, even though you didn't even drive the car. Boom. $158,000, you get to write it off that day against your earned income. If you have self-employment money or an LLC producing other income. I would pay cash for the Range Rover. We did. But the Cullinan that I have is a leased vehicle. I leased it with no money. I put it on a 24-month lease, never longer than that. Whatever the payment is, if you can't handle that payment, don't do it. And then every 24 months, I trade that car in. Why do I do a lease rather than own? Because I can write off 100% of that lease payment every month against my business income.
Okay, so he's saying a lot of true things, and then I wish he would have focused on some more things because it's a little sketch. Okay, so yes, section 179, you can write off 100% of an SUV or car that's over 6,000 pounds, but it has to be used for at least 50% of your business. Your business has to be utilizing this vehicle, and you better believe that the IRS, if you get audited, is going to ask for proof of that. So you have to be able to prove that. Another thing he touched on, but I wish there's a little more oomph behind it, was yes, you can lease it, but it spreads the deduction over the term of that lease. You're not going to get to write off 100% of the vehicle. You can write off 100% of your lease payment. Another thing is that the luxury vehicle that you have gets depreciated, you get to write it off, but there's a tax true up at the end when you go to sell it. It's also important to say, I am not a CPA, talk to your CPA about this, but this is a little more complex than what he's alluding to. And it's really important that you understand it because it's not for everyone and it can get you in trouble. He said in his video that you have to have earned income, you have to have an LLC. This is for business owners. This is not for people that have W-2 income. Do not get yourself in trouble with the government and blame Grant Cardone, because you better believe he's lawyered up and you're not going to get any help from him in this case. You have to own a business. Step one. Also, I prefer the leasing option. It makes sense for most businesses. Most businesses don't have the revenue to justify spending $200 grand on a car. That's another thing. You have to have the revenue. You can't just open an LLC, buy a car, and start using this tax strategy. You will get in trouble. You have to have the revenue to justify such a purchase, or it will be a red flag to the IRS. Another thing he said that, again, I wish was a little more detail. He mentioned that you can buy it on December 31st and you can utilize 100% of that deduction. And that is correct, but it is for the year. So if you go and you start the process on December 31st and then it's January 1st when you actually go to pick up the car and finish the transaction, you can't use it for that prior year. You have to get that purchase done in the year in which you wish to use the deduction if you are purchasing. You don't have to pay cash for the vehicle either. You can finance. Another important distinction.